What's been your best investment that you've ever made? Is it one stock? Is it one fund? Maybe a hunch that you had, maybe a tip that you got from someone else? I'll share what most people's best investment is, and this is going to reshape your thinking and improve your investing approach. Got that and more coming up. What's been your best investment since the beginning of your investment career? Or maybe when you get to retirement or when you've, accumulated enough, what's likely to be your best investment over your entire investing history? Think of it like this. If you were to name every dollar or plot every dollar you've ever invested from your first investment ever, and you could sort of see it and map it over, where it's traveled and where it's gone, which one's likely to win? Which one's likely to have the most compound growth, the most wealth building contribution to your overall portfolio? How would you answer that? What has been your best investment? Before you watch the rest of the video, what's been your best investment? Was it an individual stock? Was it a mutual fund? What would you say? Yeah, this investment has been my best investment. Want to see that in the comments below. Many people think that, well, it's, if I would have only bought Apple in the early 2000s. By the way, I've got a story for that. It ends in tragedy, by the way. But or if I would have bought Nvidia, or now if I would have bought Bitcoin way back when I first heard about it, or Tesla or something like that. Monster energy drink. Most people don't realize that's one of the best stocks ever on Wall Street. If I would have only gotten that would have been my best investment. And we all had those fantasies. It's very easy to think back and, woulda, shoulda, coulda, I almost did this. And I mean, that's my Apple story sort of thing. And so it's easy to look at those examples because they're real, right? And then apply it to your own situation and say, well, that's what I need to do. And that's what I'm chasing after. That will be my best investment. Rarely is that the case. And if you set your emotions or your mind on, I've got to go do that, it's likely to lead you down a terrible path, and a path that, could you strike gold? Could you, join the gold rush and find a big gold nugget? I mean, maybe, but it's unlikely. And you don't need to pursue that in order to have a fabulous best investment story that allows you to build millions and accumulate a significant amount of wealth. See, in 20 some years of being a certified financial planner and helping lots of folks and now working on a team, serving thousands of individuals, it's very clear. It's very clear what is the typical, best investment for the average person. Not that we don't serve folks that have, invested in Nvidia very early or Tesla very early or those exist, right? But by far, the best investment for you, for me, for just about everyone else is going to be one of two investments. It will either be the first dollar you ever invested, or it will be the investments you made when things were at their worst. It's going to be one of those two, and in time will tell. Okay, and this approach and reframing your thinking to this actually leans on discipline and the tried and true process of compound investing and how markets work, not relying on gambling, striking oil or finding that nugget of gold. It's a more tried and true process, and thinking about it and taking this approach is going to relieve a lot of stress and ensure that you stay on that tried and true process for building wealth. I can tell you, I don't know when your first investment was. My first investment came in 2003. I was just graduating from college, and I had $1,000, and I put it into an account, and I invested it into a diversified mix. And yep, it was diversified. I didn't pick an individual stock, didn't do any of that. I dabbled in that, and I still do a little bit with play money, but it was just into a diversified investment. Think about it. If I knew right now in all the, we're on the wave at the second end or the end of the tech bubble, things were just emerging. We didn't know that at the time. We were about to see the great financial crisis, and, then upcoming would be, significant, concerns with Europe and what happened with the stock market in 2012 and 13, those areas. And then COVID, of course, 2018 was nothing to sneeze at. Like, there's been a lot of turbulence, a lot of threats, a lot of bad news. But if you look back at it, that investment, that first $1,000, if I could pinpoint those dollars that were invested, they're likely to win the race, right? Those dollars that I invested earliest are likely to be the ones that grow the most and build the most wealth for me over my career. Now, the only exception to that would be in 2008, right? In 2008, if you look at what the S&P 500 was at the bottom in 2008, compare it to 2003, yeah, I'm assuming I had some dollars contributed into my 401k or right at that time that probably bought into the overall stock market a little bit below that point that I started, my entry point that I started in my investing career in 2003. And however, right, that's the second, likely best investment you'll ever make is the investment that you make when everything's going terribly, when things are at their worst. This is likely the time you don't want to invest. This is likely the time the emotions say get out or you should have gotten out, right? Think about it. I just remember all the stories and conversations from back in that time of individuals saying, should I get out? Why didn't we get out? We should have made changes. I don't want to invest right now. I'm not going to throw good money after bad. And I could continue that, that list. And it's easy right now, and I've seen some comments, and anytime I've talked about, COVID or '08 or some of these stressful times, it's easy when times are great to say, yeah, why did people ever talk about that? That, that was so easy, that was so obvious, it wasn't. Okay, yep, it wasn't. And likely the next downturn, like we saw in 2022, and whenever the next one is, it's likely to conjure up a lot of emotions that will make you feel like, well, you made a big mistake. You should have gotten out. You should have seen this coming. You should have made changes, and you certainly shouldn't be investing right now. Those are the dollars invested at the worst possible time that you don't know are the worst time in hindsight. I would go on record of saying that mid-March of 2020, I did not think that was the bottom. And yes, we'd heard the speculation, Fed's going to take out their bazooka and they're going to, print all this money. And I did not think that was going to be the bottom. And it emphatically was, and you just didn't know. In 2008, so March of 2009, I mean, it was still a couple of years past that, when it was still like, well, is this over? Is it gonna retrace and go back down? You just don't know. So all of that doubt and that fear can cause you to make adjustments and avoid investing what would be some of your best investments ever. So here's why this simple reframing is such a powerful approach. Within finance, it is so easy to be driven by envy and greed and looking at others and maybe other decisions, or maybe a Netflix documentary or a movie or something that sensationalizes the, I struck oil or found a nugget of gold, and it sensationalizes that, and you think, I got to do that. I need to do that. I'm missing out if I'm not doing that. Or it's so easy to play the woulda, coulda, shoulda, because all of finance is data. You can look back and easily that hunch that, oh, I want to buy, I want to get into Apple, there's this Palm Pilot and Apple's going to be doing something different, I should buy in. But then by the time the transfer came over, the stock price had gone up a bunch. And so I decided not to. Oh my goodness, I woulda, coulda, shoulda. Think about what would have happened. And you start beating yourself up. And that leads you down a path of making investment decisions based on desperation, right? Or greed and fear. And it's reactionary, instead of the tried and true approach of investing, a disciplined investment process over time. Because if you notice about the story, the likelihood of what's likely to be your best investment, I didn't talk about a ticker or a mutual fund or a stock. It's likely to be your contribution. It's likely to be your contribution. So, are you feeding enough contribution to your portfolio, to your financial life, so that you can get those dollars growing and building wealth for you on a compound basis over your career? You don't have to be a market timer. You don't have to find the next Nvidia. You need to be steady in your investment process and steady in your investment contribution. Have that discipline within your investment planning, and have that investment planning area connected to all 6 areas of your financial life, so you're taking a wise approach to building wealth. Work with your certified financial planner on that. If you don't have a CFP on your team, you can contact one on my team. You can find us online. That's Korhorn with a K, korhorn.com, wisemoneyshow.com. You can find us there as well, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.